Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 17th of March. I'm Daniel Lam, your host for the podcast. We've gotten some decent feedback when we're discussing the flow data approach from the podcast yesterday. Thus, I would like to dig deeper and look into other areas of interest. Global financials. They have done well for the broader part of the last 12 months, courtesy of yield curve steepening. That's because inflation expectations have been coming off and global growth prospects were picking up. Banks, they typically lend out long-term and borrow short-term, which means the net interest margins would be rising and thus positive for profitability under this yield curve steepening scenario. So you can see that such assumptions are now under challenge. Because of the spike in energy prices, the uncertainties of how long that can last, and the impact on growth, the share price of global financials have been suffering. Now in the US, the underperformance of banks have not been part of positioning unwind, as the positioning was not crowded coming into the Middle East conflict. However, there can be potential opportunities arising if the conflict ends soon or fiscal support limit growth concerns. Now, Asian equities, they're facing the issues of their reliance on energy imports and higher cost. So the equity flow data there is showing that Korea, Taiwan, and Japan are showing signs of stress. In Korea, there has been capitulation from foreign investors, and US retail investors have started to offload as well. Japan's foreign investor positioning is very elevated and prone to pullback due to concerns about Japan's energy security. In Taiwan, foreign investors have already de-risked to a large extent, and it is up to the domestic investor now. Now, CTAs, i.e. the trend-following funds, have been a key driver of the rallies in Korea, Taiwan, and Japan. Now, these momentum strategies have moderated the holdings of Asian assets. But we have not seen a full flush out of these longs just yet. So there can be further risk to these markets. But again, when the positioning gets lighter and the conflict de-escalates, these markets can look very interesting. So over the near term though, given US status as a net exporter in oil and Asia as net importer, we believe US equities is likely to continue to be outperforming in the near term. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.